Hi, this is Jorge Gonzalez with Team Data of 8 and Keller Williams Realty in Miami, Florida. Let me ask you something. If home prices were really going to come down, wouldn't we be seeing it clearly by now? We've had higher mortgage rates for quite a while, and inventory has improved in certain parts of the country, and buyers aren't bidding aggressively the way they were 2 or 3 years ago. So it makes sense that a lot of people are thinking, okay, this has got to be the year that prices finally fall. But once you step back from all the noise and focus on the numbers, the situation isn't as simple as it feels. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced a couple of years ago. But cooling off and prices coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're buying or selling in 2026. No drama or fear-based predictions, just data and perspective. Number one, what the national data shows. Let's start with what the national data is actually telling us. The Federal Housing Finance Agency, or FHFA, releases a quarterly house price index that tracks home values across the country. In its most recent report in Q1 of 2026, prices are still up compared to the same time last year. The growth rate is much slower than what we saw during the pandemic surge, but it's still positive. That matters because when people talk about a housing correction or a crash, what they're usually imagining is a broad national price decline across the board. And that's simply not what the data is showing. Now let's look at Zillow. Zillow's home value index also shows that the US home values are slightly higher than they were a year ago. Again, we're talking about modest growth, not dramatic or overheated, but not negative territory either. Then we have Redfin's 2026 housing forecasts. Redfin is projecting roughly a 1% price growth nationally this year. It's steady and measured, and it lines up with what we're seeing in all the other reports. That's a very different environment from 2021, 2022, and it's also very different from the collapse we saw, back in 2008. So when you step back and look at the broader picture, the pattern is consistent. Growth has cooled, things are more balanced, but prices aren't falling nationally. Number two, why it feels like prices should be falling. Homes are still expensive, monthly payments are high because of mortgage rates, and first-time home buyers are stretched. So emotionally, it feels like prices should be correcting. But here's what's actually happening instead. Higher mortgage rates cooled demand, yes, but they also locked many homeowners into low-rate mortgages from a few years ago. That limited the number of people willing to sell because giving up a 3% rate for a 6 or 7% rate, well, that's a big jump. So supply never surged the way some people expected. In many markets, we're still dealing with relatively tight inventory. Not extreme shortages like before, but not oversupply either. And when supply stays tight, even softer demand isn't always enough to push prices down significantly. That balance is what's holding prices steady. Buyers are more cautious, sellers are more realistic, but neither side is desperate. And markets don't crash when both sides are relatively stable. Number three, what could happen in the rest of 2026? Looking ahead, most forecasts remain conservative but steady. Redfin expects about a 1% growth rate nationally this year. Zillow anticipates modest appreciation as well. FHFA's data continues to show year-over-year gains. When several independent reports show the same trend, that adds credibility. But it doesn't mean every city is experiencing the same exact conditions. There are pockets, especially in some oversupplied metro areas, where prices have softened. And we may see a little more of that in specific markets. Local conditions can vary depending on inventory levels, job growth, and buyer demand in that area. But nationally, the data does not support the idea of a broad housing downturn, certainly not in South Florida and in Miami. What we're seeing is normalization. The market has shifted from rapid acceleration to a steadier pace, and that's actually healthier long term. Number four, what it means for buyers and sellers. What does this mean for home buyers? Well, if you're waiting for a dramatic drop in home prices, the data suggests that may not be the most likely outcome. However, buyers today may have advantages that didn't exist a few years ago. Less bidding competition, more inventory choices, and more negotiation flexibility. Those factors can sometimes create more opportunity than a small price decline would. In other words, you may not see lower prices, but you may be able to get better terms. And in many cases, that can have just as much of an impact on your overall investment. Now, what does this mean for sellers? For sellers, this is no longer a name your price market. Pricing strategy, presentation, and preparation matter. Buyers are comparing more carefully now. They have options, and that means positioning is everything. But values are not collapsing. In most markets, well-positioned homes are still selling at stable levels, and quick. The sellers who win in this market are the ones who price realistically from the start and present their home in a way that stands out. Are home prices finally coming down in 2026? Nationally, the data says no. And in South Florida, certainly not. What we're seeing instead is stabilization. The rapid run-up we experienced a few years ago has leveled off, but broad price declines just aren't showing up in the national numbers. Now, what's happening across the country and what's happening in your neighborhood can be two very different things. Real estate is local. That's where the real story is. If you're wondering what this means for your home's value or your buying power, let's take a closer look at your specific market. You can reach out to me to schedule a one-on-one strategy session, and we'll build a plan that makes sense for you this year. If you found this breakdown helpful, make sure to like and subscribe so you don't miss future market updates and practical real estate insights. Anyways, thanks again for watching this video. I hope you got something out of it. You know how to find me if you need anything. Call me, text me, email me, and until next time, thank you for watching. Bye-bye.